Over the course of this year, inflation and tax changes have affected our finances. Ernie Burns with Burns Estate Planning joins us this morning with 3 mid-year money moves to set yourself up for success before the end of the year. Hi, Ernie. Good morning.
Good morning, Meg. How you doing?
I'm good, thank you. All right, so first, a lot of people just got done with their taxes. They're kind of not thinking about their money, but what are some things that people should be focused on right now in July?
Well, you should watch inflation right now. Inflation is surging, and we've seen that throughout the last 6 to 7 months now as people are getting back to work. Unfortunately, not enough people are getting back to work, and it's short of goods and services right now. Those shortages are causing the price of these items to go up dramatically, and a lot of delays in getting the materials and items that you want, like lumber, garage doors, paper products, and things of that nature is having a big issue right now with staples.
Yeah, we've seen all kinds of things go up. Gas prices also, rising across the country. So lots of different things changing, and tax changes. So there's going to be a lot of changes coming down the pipeline as far as that's concerned.
Lot. And a lot of people don't realize what's happening. The day before Memorial Day on Friday, the 2022 budget for the United States was all placed in by the Biden administration. They are increasing taxes in those proposed changes. They're trying to increase these taxes on everyone. They're trying to repeal the Trump tax cuts. They are increasing taxes on capital gains, dividends. They will lower the federal estate tax levels, increasing the corporate tax rates. And overall, everybody's going to pay more in taxes. Now, is everything going to go through? We don't know. But the big thing about it is you got to be aware of what's increasing right now with inflation and taxes, so that you're prepared for the future.
Well, you mentioned, 3 steps that you should take now to kind of set yourself up for the future, to better prepare yourself. What is step number 1?
Step number 1 is, last year taught us a lot in the sense of you better have some money on the side to take care of yourself if another pandemic happens again or some catastrophe happens with your personal family situation. So therefore, put some money aside for the future in itself. In addition to look at your spending plan. What are you spending right now? It's mid-year right now. Or are you contributing to your retirement accounts again? Or are you building that savings account, that 3 to 6 month savings account back up of that emergency account? Or are you preparing for the future for your retirement? Or are you near retirement right now? Have you looked at your estate planning in the past? Because last year we lost a lot of friends and family, unfortunately, around the country. So have you looked at your will or your trust? Have you thought about that? At BurnsEstatePlanning.com, we can actually show you a lot of estate planning tools that you can use.
Reviewing your estate plan is step number 2, in case people at home are following along. And number 3, revisit your investments.
Yes, and in the sense of it might be time to rebalance. Last year, in the beginning of this year, we've seen a huge surge in the market on expectations that everything would go back to normal in a sense. Well, it's not happening as fast as we like. Unemployment is still high right now because a lot of people are being paid to stay home. Now that will stop in Louisiana. Governor Edwards will stop this at the end of the month. So therefore we'll get back to work, which I think is a win-win for Louisiana. But around the country in itself, you have to look at your investing for the purposes of for the future, for your retirement, and you got to be prepared that if another epidemic happens again, that you have money set aside.
That's always a good idea. Have your little, bank account with your emergency money just in case. All right, Ernie Burns, thank you as always. We appreciate it.